Well, hello and welcome to Business Morning. It's the MPC decision trading day right here in Lagos, Nigeria. And I guess the question remains, will it be another hike or a hold? I guess a cut might be out of the question for now. But let's get to the top stories that press you for this trading day. We see oil prices have edged higher in early trade after falling in the previous session as investors took stock of a potential ceasefire between Israel and Hezbollah. Weighing that on oil risk premium. That's 0.21% up for Brent crude, $73.16 a barrel. So we're seeing strength coming back into the oil market, but we see WTI crude. It did try to get back above the $70 level, but now we're seeing it below that, $69.09, but it's up 0.22% regardless. So the FX market now, we see in the NAFEX window, we saw appreciation about 12 naira 13 kobo to fix at 1,681 naira to the dollar, up 0.72%. But NFM again, weakness, 1,675. But we still see that range between 1,650 to about 1,670 range for now, 1.39%. But definitely this is on the front burner for the MPC decision today. At the end of the day, trying to solve this volatility that we see in the FX market and maybe get some strengthening for the Naira. Then another data that this MPC will be looking at, we see Nigeria's GDP grew by 3.46% in the third quarter of 2024, an improvement from 3.19% in the second quarter and 2.54% in Q3 2023, and that's according to the National Bureau of Statistics. Non-oil activities dominated the economy, making up 94.43% of the GDP, driven by growth in the services sector, while oil accounted for just about 5.57%. A breakdown of contributions from non-oil sector shows that services that contribute about 53.58% to the GDP. Agriculture and industries also recorded improvements, adding 28.65 and 17.77% right there. Then services 53.58% for the sector contribution to GDP. So quite an improvement, but oil there just about 5.57%. And talking about oil, the Port Harcourt refineries commenced operations. Port Harcourt refineries officially resumed crude oil processing with truck loading commencing. That's actually commenced today. The Nigerian National Petroleum Corporation Limited expressing deep gratitude to all Nigerians for their patience at this time. The NNPCL says despite facing numerous challenges, NNPC Limited remains steadfast in its commitment to ensuring the nation's energy security. Efforts are also underway to bring the Warri refinery back online in the near future. So definitely we're going to stay tuned to this one. And we'll see how this impacts the oil and gas counter that's on the NGX. We'll see how traders actually react to this news. So, yeah, quite bullish news at this point for the oil and gas industry. All right, to our first conversation now. I'm still talking about the Q3 GDP data. We see finance and insurance sector, that's financial institutions and insurance, showed notable performance in the third quarter 2024. Financial institutions accounted for about 91.76% of the sector, while insurance contributed 8.24%. In terms of growth, the sector saw a 74% increase in nominal terms year on year. Financial institutions led with a 75.99% growth, while insurance grew by 59.84%. And let's analyze this data. We'll also explore microfinance and how we can better support Nigeria's education sector. Joining us to discuss this, we have Bomi Lawson. She's the MD, CEO, Edfin Microfinance Bank. Great to have you on the show. Good morning.
Thank you.
So before we get into the conversation, today is the D-Day. We get decision for the last rate setting meeting of 2024. How are you financial services players bracing for this one?
Yeah, unfortunately, inflation continues to remain high, at over 33%. So it's either they keep the rates steady, the MPR rate steady at the current 27.25, or maybe go up to 27.5. It's not likely to come down at this time. And really, we need to get a handle on inflation. And so that's why the monetary rates will continue to go high, and therefore signaling that interest rates will go higher, affecting businesses and limiting access to credit.
All right, I'm talking about, limiting access to credit. How do you think, businesses can still be supported at this time, even though we see households, they're going through a cost of living crisis, but, businesses must still try to do business. So is there any way that, that access to credit can still be there, even though it's a high interest rate environment?
Yeah. So businesses still have to try. They have to be resilient in this time, and really to look at the economic environment. So where are their goods and services needed the most? So one key area that I advise most businesses to explore exports. I know it's not easy to do that overnight, but if you are selling something that you can export, now is the time to start earning foreign currency. So that way, even though you are taking Naira loans, you are still able to sell with a wide margin to pay off those loans. Then look at essential commodities, given the low purchasing power. What are essential commodities that people still have to buy? So for instance, things like food, your health, those essential things that are needed, transportation as well. And, so those are areas you have to say to yourself, what should I do? How do I reduce cost? How do I increase my margins and still thrive during this time? Because Nigeria needs businesses to actually thrive, for our economy to continue to grow and even increase our foreign exchange revenues. So explore exports, look at essential commodities, reduce costs as much as possible. Then, of course, people also talk about the sachet economy. So small sizes of whatever you're producing, so people can afford to buy it in bits, and you'll find that maybe your margins are even higher. So those are some of the things that businesses have done to really thrive in this time.
Experience in the industry so far, have you ever seen a time like this, and how were we able to come out of it?
Yeah, business, the economy is cyclical. Government should do a lot more, I would say, especially in identifying industries that are critical to the growth of the economy, so that there should be some government subvention. So like, for instance, you have the Bank of the Industry, you have various development banks, and even international multilateral development banks should focus on critical areas. So for instance, electricity generation, food production and processing. What are we going to be looking at for exports? So for instance, even the creative industry is one area too that I feel that we're not tapping enough from the nation's point of view in terms of ability to earn foreign currency. So I feel that government should, try to ease priority sectors and give some sort of subventions and funding in those areas. And of course, the issue of taxes, reduce, encourage those, give some incentives for those sectors so that they are actually able to compete in this harsh environment. So those are some of the things. And yes, this has happened before. We've had cyclical issues in terms of the economy. I can't remember the year specifically, but during the COVID pandemic was one area too that businesses were shut down. Government came in with interventions, businesses supporting each other, and we were able to overcome that. The same thing is what I feel needs to be done now. Businesses shouldn't give up. Now is not the time to japa or go away. It's actually the time to hunker down, be more creative and innovative in our products, and especially explore exports. I keep saying that we need exports, so that we are earning more FX revenues.
Right, I like that. Now it's not the time to run away. Let's all stay and dig it, together at this point. But looking at the Q3 GDP data, we see the financial services sector contribution of finance and insurance to the real GDP, that totaled about 5.51% higher than the previous contribution. That was about 4.36% in the Q3 of 2023. So how are you seeing this number? Is it the high interest rate environment, helping the sector stay higher?
Well, banking is always needed. I would say it's almost an essential commodity, the trade of money. So first of all, in Naira terms, the volume of money seems to be much. So as a percentage of that Naira, so your charges and interest rates, of course, too, is high. So that's one key area. And then, of course, the interest rates actually help that. But more people are now coming on to the banking services. So, you've seen digital banking. It makes it more easier, but you see the charges for each transfer. So even if you are doing your transfers in smaller bits, so maybe before you transfer 1 million at one go, now when there's an economic hardship, you are transferring 100,000 10 times. And so if the banks are making more money that way. But really, we need to look at the manufacturing sector. They are suffering. That's where the jobs are. We need to look at areas where we can employ our youths with the unemployment rates at over 30% plus, especially among youth. That's totally unacceptable. So even for the banks, where are they lending credit to? The incentive should be given to banks to encourage them to lend to real sectors to de-risk some of those products. So those are some of the things that we want. We don't want a situation where you're looking at the stock exchange GDP. Financial services is growing. But when you look at health, manufacturing, the average living standard of people is actually declining. That creates an imbalance that needs to be addressed.
Right. I guess we have to see all sectors grow with the banks at this point.
Yes.
But with most banks opening, less branches and fintechs, not needing branches, it seems the sector might be needing less workers, with the growth of technology.
Yes. So there will be a transition. For instance, you need more people then employed in technology, coming up with innovative apps and applications. So yes, the administrative work of posting and all those things will be totally eliminated. But then we are expecting that people should then be more innovative in how you fund, creating new innovative products. So technology, yes, makes for more efficiency. It tends to initially reduce the number of human capital you require, but you find that what happens is that the human capital requirement shifts to different sectors, and not that as a number, it actually reduces. So it enables growth, it enables them to expand. So therefore, you may recruit more people in the areas that need skill and innovation, and thinking, more critical thinking, will then be applied than being engaged in rudimentary administrative work. So those are the things that will change.
And looking at a sector that needs funding right now, we see Nigeria's education sector, numerous challenges from poor infrastructure, limited access, to quality education. But speak to me about how microfinance can help bridge this gap, because with the cost of living crisis, we've seen parents have to pay more right now for school fees. Seen with the whole fuel price hike, we're seeing the school buses getting more expensive at this time. So we're seeing demand squeeze, for education, but at the same time, there's a funding squeeze, for these schools. So how are you seeing this?
Yeah, so education is a key priority sector, especially when you want to look at human capital development. As we just spoke about technology and the impact on human capital, we need more thinkers, more people that are innovative. And it's education, the training of human capital that would lead to that. Sadly, the Nigerian Bureau of Statistics recently released data showing that we have over 45 million children out of school. It was just so disheartening to see that report, and that's because, first of all, government is not providing enough schools at the basic level for because we have a high fertility rate. So there's an increase in number of children that need to go to school. There are not enough seats for those children. But when you now look at private sector, because of lower purchasing power, people then place the ability to eat 3 square meals higher than sending my child to school. So let's go and sell, and so on and so forth. So you find lots more children not being in school. So government really needs to be able to support even the private sector education. So that's what EdFin does, my bank. Provide funding to those schools so that they can create increased access for education. To me, education of your human populace is what makes your human resources become human capital. So that it's a resource that you are able to use to grow the economy. We need to invest more in the education. There's a crisis, panic should be, the state of emergency really needs to be declared on education, especially at the basic education level, primary and secondary schools, so that we have more seats, more teachers are trained properly, so that we have children who are able to work, in the new world that is coming, technology, creative thinking, and all of that. We need to be sure that our children are able to compete globally with any child across the world, and that currently is missing. So we certainly need government support, especially with the affordable schools, where the average Nigerian child goes to make sure that content, learning outcomes are improved, and that we are training those children for the future of work.
Right, because the future of work is really dynamic at this point. But thank you so much. It was great having your perspective as Mr. Bumi Lawson, MD, CEO, EdFin Microfinance Bank. Thank you so much for coming on today.
Thank you. Thank you so much for having me. It's good to be here. Thank you.
All right, we'll take a break now. When we come back, we're going to gauge the impacts. That's for the stock market. Most of the bullish stories we see so far. That's in a moment. Just stay with us. Welcome back. Well, let's get to what to expect now for the stock market today. We have joining us, we have Mukhtar Mohammed. He's the CEO, Finance with Mukhtar. Great to have you on the show. Good morning.
Good morning, Ladi. Always a pleasure. Good morning.
Yeah, so we have the Q3 data, GDP data, showing growth at this point. Is that bullish for the stock market?
Well, if you look at that GDP data where it's bullish, then you look at you could say it's bullish, but again, it's not turning bullish because of some issues, macroeconomic issues. That data was largely driven by the service sector, and if you look at the service sector, it is where you have the lack of the communication companies, agricultural companies, and the oil and gas companies and the financial companies. So for the financial companies, they have been bullish. For the oil and gas, you also know they have been bullish. But for the agricultural sector, also you could say the bullish if you look at Okomo and Prisco. But for the others, service sector like the telecommunication sector, you look at MTN, you look at Airtel Africa, you can't say that of them. So definitely, yes, it could be bullish based on the sector, but which stock we are playing with at the moment, because like I said, the communication sector is having its own challenges that have to do with FX, which affects devaluation, and most of them that depend so much on imported goods. So definitely is bullish with the financial sector, is bullish with the agricultural sector, is also bullish with the oil and gas sector. But for the communication sector, macroeconomic indices is not making it look bullish.
Right, and from last week into Monday, we saw the banking counter. We've seen sell pressure for the banking counter. Do you think this might change that? Now seeing that the services sector is really good, especially for financial services.
I think you are seeing that pressure on the banking sector based on the MPC report. MPC communique that we're expecting today, because a lot of people expect to be a hike in MPC, and that if you look at this result from the banking sector, the third quarter result, you realize that this hike also is going to have a very negative impact on them, especially with the non-performing loans. So definitely investors are beginning to take a look at that. So that is what I think is driving that negativity in that sector. But I think in the long run, what we've seen is the high comes and it goes. For the past month, we've been seeing those high, and the banking sector have still been very resilient. So we expect that to happen. But like you've rightly seen, there's a pullback, especially in some equities. Mostly the tier 1 bank and especially Access Bank, you've seen that pullback into bringing it to a low of almost 22 naira compared to a high of about 24 about during the week. So we'll continue to see those pullback, but again, that it depends. Some investors are seen as a good entry point because the banks are still very, very liquid, and we expect that liquidity to flow in terms of dividend payout to investors, which will take care of what they suffer in terms of capital depreciation that may happen, but the liquidity is still high. And again, the third quarter result from this banking sector is different. So it could be a good entry point for some investors.
Right. So normally we should have possibility of 3 outcomes for the rate decision, but some say we should take a cut out of the picture. So we're looking at maybe a hike or a hold. So for both scenarios, do you see the market reacting, or it's already priced in?
It's already priced in, Ladi. We've been pricing it in and in and in. I think the only time we didn't price it in was the last MPC meeting, which people were bullish about. There will be a cut in rate, and they surprised us with the hiking rate. So we are used to the hiking rate. So it's already pricing. Like I said, it's already pricing. It depends on which sector that you are. If you're in the banking sector, like I said, high liquidity will help you cover up for what you suffer. High liquidity and good dividend pay will help you cover up for what you suffer in terms of depreciation. If you're in the communication sector, you have to wait longer. If you're in the manufacturing sector, you also have to wait longer. If you're in the financial sector, like I said, then you should be bullish. And if you are playing in the agricultural sector, you also should be bullish because you've seen about 23% growth. So definitely the hiking rate has played its role. You see that again, if that comes out, we'll see those that will suffer. And those that normally suffer, the conglomerate, the manufacturing stocks, the consumer goods stocks, and also the communication stock. We see the banking suffer a little, but we normally see a recovery in the long run for the banking sector.
All right, we also have bullish news this morning. Port Harcourt Refinery commencing crude oil processing today, and trucks are loading at this point. How are you seeing this, and how will it impact the oil and gas counter on the NGX?
It will have impacted it positively if we have MPC listed in the exchange today. So it would have gone on the full beat. So hopefully we get MPC listed next year as they have promised us. With them and Dangote. But when you look at that, who is going to really benefit from it is the marketing arm of those companies that are listed, and you're already seeing that they're already benefiting, like stocks like Total. But for Wando and Arada and also Seplat, maybe Eternal Oil also will benefit from it, but for Wando, Arada, and Seplat, what will definitely be good news is when we see those up in terms of crude oil productions from those entities. But for now, I think the marketing companies that are listed in the exchange that could see a little bit of possibility, like I said, Eternal Oil, and also those that are in the downstream sector, the Eternal Oil and also Total. But for the upstream sector, we will have most the marketing companies like Owando, Arada, and Seplat. We might not see so much of this news benefiting them. But again, like I said, if we have NMPC listed today, that could have been good news.
Right, and definitely, I'm wondering if it came as a surprise, to you, hearing that the Port Harcourt Refinery is coming.
Larry, it's a big surprise. Is what we've always been waiting for. The MD have said it over and over again. At a point, he said, "This time I'm not lying." So finally, NMPC is lifting in Port Harcourt Refinery. And the good news about it is what we've always craved for. We've create competition rather than monopoly, whereby you could only live from Dangote Refinery. So what we'll see now, hopefully we should see that drive down price in the short and long term. now it won't be a challenge, but we have challenge now, and that challenge might come to if they will be able to meet up with the demands, because again, that will slow down their supply of crude oil to Dangote, and that might even some Dangote now thinking of importing crude oil for refining. So that will create that competition that we always wanted, and once that competition comes, then the price will come down. And you and I know that once price in terms of the crude comes down, the people are the ones to benefit, because the economy is a petrol economy. When we see that price begin to come down, then definitely we'll see inflation come down in the long term, not immediately. And you see a lot of activities open around that space. For me, very fantastic news. We have 2 refineries working in Nigeria, Dangote Refinery and Port Harcourt Refinery. That means we will no more put so much pressure on our efforts in terms of importing refined petroleum products. That could also be a game changer. That could see exchange rate also come down, because if you say it's 40% of the pressure on the exchange rate is largely driven by demand by petroleum marketers for importation of refined petroleum products, and this is largely controlled by MPC, who have been the larger importer of refined petroleum products, and now they won't be importing again. For me, largely fantastic news for Nigeria. But let's watch and see whether that will drive down price.
Yeah, great news. But I'm sure Nigerians just want to know, when I go to the pump price, even you and I, are we going to buy at an affordable rate? Because we know the pain when we go to the pump.
What is being like, we will start seeing more queue in the NPC filling station if they be trying to sell it cheaper than all other filling stations. And that could also help Dangote begin to think of crashing his own. And then we could just see the game changer that we always look forward to in terms of
would it be some kind of price? Would it be a price war?
That's what will benefit us. I tell you, if it comes a price war, when the 2 elephants fight, they say the grass suffer. This time, when the 2 elephants fight, the grass will not suffer. Rather, the grass will have options.
All right, I guess it's time for the grass to enjoy at this point and get greener. Well, thank you so much. It was great having your perspective. Mukhtar Mohammed, CEO, Finance with Mukhtar. Thank you.
Thank you for having me, Ladi. Always a pleasure. Thank you.
All right, so trading is on right now, and definitely we'll give you a coverage of the MPC decision. That's the last one for 2024. Would it be a hike or a hold? We'll find out at 1 p.m. I will have my guests here to analyze the expectation and what's before this Monetary Policy Committee. Thank you for watching. That's it from me on Business Morning. I hand things over now to the Sunrise Daily team.